Hello students, hope you all are well. Let us start our next video on the basis of elements of accounts part 1 standard 12. Student, I want to tell you that before this video, the last video, I completed the first chapter of part 2. Now I will do the revisions for your coming test. All of you know that your 4th unit test is going to do on 27th and 28th of October, and the syllabus or the chapters which are included in 4th unit test, that is chapter 5, chapter 6 and chapter 7. And chapter 5 and chapter 6 and chapter 7, these all three chapters are coming from the part 1. And when I taught you the chapter 5, 6 and 7, that time I told you details about the weightage of the chapter, and according to that the questions will come. Part 1, 5th chapter, you are having total weightage 9 marks. That out of this 9 marks, the 1 mark 1 questions, that is from section B. This is 5th chapter. You will get 1 mark from section B, and you will get the 8 mark 1 questions. 8 mark 1 question matlab 1 practical, full practical sums, and 1 from section B, that is 1 plus 8 is equal to 9. Similarly, for the 6 chapters, you will get 1 MCQ and 1 8 marks. They are also 9 marks. And the 7th chapter, you will get 8 marks. So 9 plus 9, 18 plus 8. 18 plus 8 is equal to 26. But question will come 25 marks. From here, maybe 1 mark will be deducted. And from 7th chapter, you will get 1 MCQ, 1 section B, and 2 questions from section C, that is 3 marks. So anyhow, the chapter 5, chapter 6 and chapter 7, that is admissions of the partner, retirement or death of the partner, and dissolutions of the partner. These 3 chapters, once again I want to do the revisions for your coming test. And in this chapter, the theoretical part, whatever that I already told you, and this exercise questions, whatever it is given from page number, according to your textbook, the page number 203. Page number 203, whatever the question it is given, the MCQ, all this MCQ, you are having the total 10 MCQ. All these 10 MCQ you will go through and answer it. It will be already given in the back section. Question number 2, that is section B's questions, that also answer, it is given theoretical part, that also you will make practice. The third questions, page number 204, question number 3, that is so many short type of questions is given. Though in this chapter short type of questions are not coming according to your paper style, but long sum when you will do, that time this also calculations is required. How you have to find out the new profit and loss sharing ratio, how you have to find out the side effect ratio, how you have to find out the new ratio, including the partner who is coming, including the new partner, like that. So that's this all you will do it. Today, for making practice, one illustrations, very important illustrations that I selected, that will do it practice. At the same time, one exercise sum also will make you practice. So I want to go through the page number 88, page number 188, illustration number 24 from your textbook. I want to explain it. Several times I told you, students, maybe you are knowing how to do the questions, how to solve the questions, but you do not know how to save the time. So in which method you are doing, that also you have to pay attention, which is the suitable method for you. So once again, the things or the which way I told you to do, maybe you have forgotten. Once again I want to do it, or I want to tell you, please follow it. Page number 188, illustration number 24. I am reading the questions. You follow it. Whenever you will read the questions in this chapter, I told you what are the data it is required to solve it, that will pay attention. Balance sheet, whenever you read how many D are there, D means the distributions, the amount should be distributed. Whenever you will read the adjustment, then each adjustment beside that you write it, it will affect in which place. So then when you will start doing solutions, that time it will help you. Now come on, Kanvi and Kabisa are the partners in a firm, sharing profits and losses in the ratio of 2:3. So that is the Kanha and Kabisa. Kanha and Kabisa are the partners, are the sharing profit and losses in the ratio of 2:3. So old ratio is 2:3. And balance sheet of their firm on 31st/3/2016 was as under. Whatever it is given in the balance sheets, the capital of Kanha is 80 and Kabisa is 1 lakh. 1 lakh plus 80 plus 1 lakh is equal to 1 lakh 80. Contingency reserve. When I read this contingency reserve, that time it should be strike in your mind that this should be distributed to the partner's capital account, old partner, old ratio. 15,000, workman compensation fund 40,000, that also will be distributed if nothing is given in the adjustment relating to the workman compensation fund. But till now I know that this amount should be distributed if anything is not given. If anything is given in the adjustment, according to that we will follow it. Same case for the investment reserve also. If nothing is given in the adjustment, full amount will be distributed. If anything is given in the adjustment, according to that instructions we will do it. Creditors 50,000, battery reserve 3,000. Building 1,10,000, machinery 50,000, stock 30,000, debtors 66,000, bank 14,000, investment 30,000. Obviously here investment is there, here investment reserve is there, something will be there. Let us see what is given. They admitted P as a new partner from 1/1/4/16 of the following terms. What is given? That P is coming. In which condition P is coming? P told that Kanha sacrificed 1/2 of her share and Kabisa sacrificed 1/4 of her share in favor of P. This is the most important. 1/2, 1/2 of her share. So how much was her share? Her share was 2/5 and Kabisa her share was 3/5. So that we have to find out what is the side effect ratio on the basis of that, and what is the ratio for P also on the basis of first adjustment. So the first adjustment, it will not affect to anybody like that, but it will help you to find out the side effect ratio and the gaining side effect ratio by the old partner and gaining ratio by the new partner. Good. Second point, goodwill of the firm is valued at ₹80,000. Firm का goodwill 80,000 है. This will help you, or this will affect the capital account as well as the cash account. Because goodwill of the firm is valued at ₹80,000, we have to calculate how much amount the new partner will bring, and on the basis of that it will affect the capital account as well as the cash account. But Kanha and Kabisa will withdraw 50% of their share of the goodwill. Whatever the goodwill he is bringing, the P, uska half, that this old partner will withdraw. So this also will affect capital account and cash account. Why I am telling to write it here? It will be easy when you will do the revaluations account. Still now, the first adjustment, second adjustment and third adjustment, the revaluations account has not come. Number 4, depreciations of the machinery is to be provided at 10%. This effect will come. One is revaluations account and there is machinery account. That you understand, all of you. Number 5, bad debt of ₹6,000 is to be written up and provisions for bad debt reserve is to be kept at 15% on debtors. This will affect revaluations account, debtors account and bad debt reserve account. Here bad debt reserve is there. So bad debt of ₹6,000 is to be written up, provide bad debt reserve is to be kept at 15% on debtors. Here after reading this adjustment, I want to tell you this adjustment will affect in where. So this fifth adjustment will affect the revaluations account and the debtors account and bad debt reserve account also. Number 6, market value of investment is ₹15,000. See, investment it is given 30,000 and market value it is given, it has gone down. That means there is a loss of investment is 15,000. See, this is 30,000 investment, it is given in the old balance sheet, and adjustment it is given that this investment market value became 15,000. That means there is a loss of investment, that is 15,000, but already you are having a reserve 12,000. So this 15,000 loss you can make up from this 12,000, but after taking this one also, still 3,000 is required, which will go to the revaluations account. So sixth adjustment, revaluations account, investment account and investment reserve account, these three it will affect. The seventh, claim for workman compensation is to be accepted by, again same case. The workman compensation fund, it was having 40 but claim came 50. So you cannot distribute this one, because 40 you are having but you need 50, 40 you are having but you need 50, still 10,000 you have to go right in the revaluations account. So one will affect the revaluations account, another will affect the workman compensation fund. 10% of the creditors are not to be paid. This is revaluations account and creditors account. And the ninth, P will bring 1,20,000 as capital. So he will give 1,20,000 as capital, that is capital account and cash account, and her share of the goodwill in cash, whatever that is with the second adjustment. Now you see from the balance sheet we are having 3D, but out of the 3D, 2D it will be adjusted with the adjustment, and 1D contingency reserve, that will be distributed of 15,000 to the old partner according to the old ratio. And you are having here 9 adjustment. Out of the 9 adjustment, first, second, third, these 3 revaluations are not there. 4, 5, 6, 7, 8. 4, 5, 6, 7, 8. That is 4, 5, 6, 7, 8. 4, 5, 6, 7, 8. 5 adjustment you are having the effect in the revaluations account. So first we will do the revaluations account. But before doing the revaluations account, I told, first of all, partners capital account you will draw, bank account you will draw, and balance sheet also you will draw. Partners capital account, whenever you will draw, that time first you will write the opening balance. Opening balance of partners, old partner, that is Kanha and Kabisa, that is by balance BD 80,000 and 1 lakh. Bank account also 2 balance BD 14,000. This is the opening balance of bank account. This is the opening balance of the partners capital account, old partners capital account. Now we will come one by one the revaluations account. First adjustment I am not okay. First adjustment, second adjustment, third adjustment, like that we will do. But revaluations account let me complete. After that, once again we will start the adjust number 1, 2, 3, 4, like that. The revaluations account, first is coming fourth adjustment. The depreciation of the machinery is to be provided 10%. Machinery, how much you are having? 50,000. Depreciation 10% means 5,000. So machinery, to machinery 5,000. There is a loss of the machinery. So revaluations account debit to machinery. And second effect will go to the new balance sheets. Fourth is over. Fifth, bad debt of rupees 6,000 is to be written up. Bad debt 6,000 written up karna hai. Debtors you are having 66,000. Out of that they are telling bad debt should be 6,000, but already you are having a reserve of rupees 9,000, bad debt reserve. So actually you have to deduct the bad debt. Your loss is this year, matlab bad debt you have to show only the 3,000. Why? Because they are telling to create bad debt 6,000, but already you are having bad debt reserve 3,000. So only 3,000 bad debt we will create new to bad debt of rupees 3,000. And next they are telling that 15% bad debt reserve. Now debtors you are having 66. Out of that 66 is the debtors. Here you see that 66 is the debtors, less bad debt 6,000, you are having 60,000, and they are telling bad debt reserve 15% you create. So 15% of 60,000, which comes 9,000. So this is one bad debt reserve which coming, revaluations account debit sides 9,000. Second effect of balance sheet it will go, that every one of you know. Next is coming the market value of the investment 15,000. I told you investment you are having 30,000 and it is reduced by 15,000, but already you are having 12,000 reserve, so your loss is 3,000. So this is coming that investment to investment of rupees 3,000. And second effect, investment new balance sheet it will not come. claim for workman compensation is accepted to be accepted 50,000. Here claim you are having 40,000. So again loss. So provisions for workman compensation is about rupees 10,000. The revaluations account. And 10% of the creditors are not to be paid. This is creditors you are having how much? 50,000. So 10% it comes 5,000. It is your income by creditors 5,000. So here you got 5,000 tick, and this is workman compensation, investment, machinery, bad debt and bad reserve. Everything you got it, and you are getting that balance of rupees 25,000, because if you add you will get total 30,000, and you are getting balance 30,000 minus 5,000 is equal to 25,000. That is loss. Debit side more, credit side less. Loss you are getting 25,000, that is to be distributed in the ratio of old, that is 2:3. So Kanha will get 10 and Kabisa will get 15. So revaluations account is over. Now we have to go into once again we will go from the first adjustment. Okay, now what we will go to do first, we will find out the sacrificing ratio sacrificed by Kanha and sacrificed by Kabisa. Keep in mind that Kanha is giving half of her share and Kabisa is giving 1/4 of her share. See, it is given it here. The old ratio is 2:3. Kanha is giving half of his share. Half of his share means that half of 2/5. 2/5 how is coming? Because his share is 2:3. So half of 2/5. Half of 2/5 means the 2/10. Kabisa is giving 1/4. 1/4 of her share. So 1/4 of 3/5. Her share is 3/5. So 1/4 multiplied by 3/5, that is 3/20. So sacrificing ratio is coming 2/10 and 3/20. 2/10 and 3/20. If denominator, if you want to make equal, so this you have to multiply by 2/2. That is 4/20. So 4:3 ratio. The goodwill will be distributed to both the partner in 4:3 ratio. This is 4:3 ratio is the sacrificing ratio. Correct? Now goodwill. Amount of the goodwill you have to find out. Now who is coming new? Palak. Palhi. Sorry, P. I am telling P. So P is coming, and P's share is how much now? P is getting 2/10 from Kanha and 3/20 from Kabisa. So 2/10 plus 3/20, if you add, you will get 7/20. 7/20 is the share for P, and P will give the 7/20 of 80,000. 80,000 is the goodwill for the business. Second point it is given. 80,000 is the goodwill for the business. So 80,000 multiplied by 7/20, which is coming 28,000. 28,000 is the amount of the goodwill which P will give. Correct? And P told that he will give in cash, because last point it is given. The P will give 1,20,000 as capital and her share of the goodwill in cash. So he is giving bank account debit to premium for goodwill, that is 28,000, and premium for goodwill account debit to Kanha's capital and Kabisa's capital. That is which ratio? 4:3 sacrificing ratio. That you understand. So old partner capital account will be credited by 16,000. Kanha and Kabisa's capital will be credited by 12,000, and this is bank account debit to premium for goodwill and premium for goodwill account debit to old partner capital account. Now you come the partners capital account. Partners capital account, first you wrote the balance 80,000 and 1 lakh. That is correct. And also bank account you wrote 14,000 opening balance. Now what we will do? We will start from the balance sheets. Contingency reserve 15,000 distributed by contingency reserve 6,923, 2:3 ratio. So it's over. You understand? Okay. Next, first is over. Second, goodwill of the firm is valued 80,000. That we already got the goodwill of the firm. So journal is there. Bank account debit to premium for goodwill. Bank account debit to premium for goodwill 28,000, and premium for goodwill account credit by the Kanha capital and Kabisa's capital, that is 16,000 and 12,000. Just now I told you this is. So 16,000 and 12,000, you got it. So this side 80,000, 1 lakh, 6,000, 9,000, 1 lakh 20,000, 16,000, 12,000, everything you got it. Now this one. Now they are telling that one adjustment it is given that half of this amount will be, yes, third adjustment, that Kanha and Kabisa will withdraw 50% of their share of the goodwill. So how much is credited? 16 and 12. So it will be debited 8 and 6, half. This is 8 is the half of 16, 6 is the half of 12. So partners capital account debit to bank. Bank account credit by Kanha's capital and Kabisa's capital. Okay. Next, workman compensation fund, that I already told you. Revaluations account and new balance sheet, it will not be shown. Investment reserve, that also is adjusted. Creditors, nothing will be coming in this partners capital account. Okay, now adjustment. First adjustment is over, second adjustment also over, third adjustment also over, fourth adjustment also over, fifth also over, sixth also over, seventh also over, 8 also over, 9 also is over. And you are getting that one, 10,000 and 15,000 revaluation balance, that is partners capital account debit to revaluations. So 8,000, 6,000 you got it, 10,000, 15,000 also you got it, and this side 1, 2, 3, 4, 5, 6, 7, all amount you got it, and this is the balance, 84,000, 1 lakh and 1 lakh 20. Similarly, you are getting the cash balance started by 14 and it is ended by 1 lakh 48, and this is your balance sheets. Now balance sheets, this is 84, 1 lakh and 1 lakh 20, 84, 1 lakh and 1 lakh 20. This is 84, 1 lakh and 1 lakh 20, 3 lakh 4. Workman compensation fund reserve, that is workman compensation claim. New balance sheet, it will come 50 because 40 plus 10 increase. Creditors, it will decrease 50,000 minus 5,000 is equal to 45. Bad debt reserve will not come. Balance sheet size is over. Asset sides, building 1 lakh 10, no change. Machinery for 50 became 45. This 50, it is reduced by 5. Stock 30, as it is 30. Debtors 66 minus 6 minus 9, 51. Bank, here 14, but it will come 148. And investment according to the new, it is 15,000. This is 15,000. I think you understood. Like that questions you have to make practice. This coming test 1 and 8 mark questions, it will come. I am sure that everyone should do it like these questions. So whatever I taught previous video, same thing once again I want to tell you. Like this, all these illustrations, students, very carefully you keep in mind. All these illustrations, the illustrations which is deducted according to the 30%, that no need to do. All this exercise which is deducted according to 30%, that no need to do, but remaining all these illustrations as well as all the exercise questions from your textbook, you practice so that you will be able to understand and make practice. This is most important questions what I told you from the chapter 5 from your illustrations. Like that, one more questions from your exercise also I want to do, that also you follow it. Now let me do one question from your exercise. All this exercise are the most important, students, I want to tell you. So long sum of 8 marks, obviously it will come either from your illustration or from exercise. It will be like that questions. So question number 12, 1 to 12 from your exercise, I want to read it and I want to show the solutions that try to understand. What is given it here? P and Q are the partners sharing profits and losses in the ratio of 3:2. So PQ, 2 partners, old ratio 3:2. Balance sheet of the firm as on 31st 3/16 was as under. What is balance sheet is given? The capital of PQ 70, 50, 120. 70,000, 50,000 is equal to 1,20,000. Provident fund 18,000, creditors 22,000. Assets, land and building 80, debtors 22,000 minus 2,000 is equal to 20,000. Stock 36,000, cash 4,000, goodwill. Here it is given goodwill, so you have to understand that one distribution amount is coming. Goodwill it is given in the asset side, so the amount we have to distribute to the old partner according to the old ratio. And this liability sides, nothing is given for the distributions. 1,60,000, 1,60,000. What is given in the adjustment of the above date? They admitted R as a new partner on the following terms. The R will bring 60,000 as capital in cash. Every one of you know the first adjustment will affect in partner's capital account and cash account. What is the cash balance? 4 opening and cash account debit to R's capital account. Goodwill is valued at rupees 30,000. So according to that 30,000, how much R balance ratio is coming, that he will bring that much money. But it is given that R cannot bring his share of the goodwill in cash. So R is not bringing any cash for goodwill. But this goodwill amount will be adjusted with the partner's capital account. So R's capital account will be debit and the old partner's capital account will be credit according to their sacrificing ratio. Number 4, lantern building 90,000. Here lantern building 80. Here it will be 90. Malab 10,000 is increasing. So revaluation account it will affect. Battery reserve is to be provided 5% on the debtors. See, the battery reserve is having how much? It is not 10%. 10% it comes 2,200. Less than 10%. Out of 22, 2,000 is the battery reserve. But now they are telling that 5% battery reserve is enough. Battery reserve 5%. 5% of 22,000 it comes how much? 1,100. Do you understand how I am calculating? Because 22,000 का 10% होता है 2,200, तो 5% होगा 1,100. Actually 1,100 battery reserve is required, but already you have deducted 2,000. That means 900 battery reserve you wrote more. That will affect to the revaluation account. Revaluation account credit sides 900. You understand what I said? 1,100 battery reserve is required, but 2,000 battery reserve you have done. 900 battery reserve you wrote more, so it will affect to the revaluation account credit sides. Next, value of the stock is to be reduced by rupees 400. Stock का value 400 reduce करना है. Revaluation account it will affect. Creditors of rupees 500 are not to be paid. Also it will affect to the revaluation account. Creditors you are having 22,000, 500 रुपया creditors जरूरत नहीं है. New balance sheet में creditors 21,500 होगा. And the new profit and loss sharing ratio 5:3 it is given. That is the new ratio is 5:2:3. So this is R share. R share is 3/10. 5 plus 2 is equal to 7 plus 3 is equal to 10. So R share is 3/10. And sacrificing ratio you have to find out. All of you know how to find out the sacrificing ratio, because this is the old ratio 3/2. This is the new ratio 5/10 and 2/10. If you subtract, you will get that sacrificing ratio. How to find out the sacrificing ratio? Sacrificing ratio is equal to old is 3/3:2, new is equal to 5:3, and the sacrificing ratio is equal to old share minus new share. So P, old is 3/5 minus new is 5/10, which is coming 1/10, and for Q it is 2/10. So sacrificing ratio is equal to 1/10 is to 2/10. That means 1:2 ratio. Clear? Sacrificing ratio is 1:2 ratio. And goodwill. Goodwill is total value is 30,000 and his share is, our share is 3/10. So 3/10 of 30,000, which is coming 9,000. 9,000 is the amount of goodwill. Clear? Correct? And this goodwill he will not bring cash. So his capital account will be debit and the old partner's capital account will be credit according to the sacrificing ratio. So this is, it is given. R's capital account debit to P capital, R's capital account debit to Q capital. मतलब R's capital account debit to P to Q. R's capital account debit 9,000, to P's capital 3,000, to Q's capital 6,000. Correct? And the old goodwill it was given in that old balance sheet 20,000. That I wrote D. How it P's capital account debit, Q's capital account debit to goodwill. Which ratio? This ratio are not same. This is old ratio and this is sacrificing ratio. Sacrificing ratio is 1:2 and old ratio is 3:2. I think so. Yes, 3:2. Now come to the revaluation account. First one. Revaluation account बैलेंस शीट में नहीं आता है, एडजस्टमेंट से होता है. फर्स्ट एडजस्टमेंट इफेक्ट नहीं करेगा, सेकेंड एडजस्टमेंट ऑल्सो नहीं करेगा, थर्ड ऑल्सो नहीं करेगा, फोर्थ वैल्यू ऑफ लैंटर्न बिल्डिंग 90. यस, lantern building 80, this is 90, 10,000 lantern building increase, correct. Number 5, battery reserve is to be provided 5% on debtors. I told battery reserve ज़्यादा है तो क्रेडिट करना है, देखो battery reserve is 900 credit. Number 6, value of the stock is to be reduced by 400, stock reduced by 400, revaluations account debit by 400. Creditors 500 not to be paid by creditors, profit for the coming credit sides not to be paid. And so the revaluations account 10,500 and 900 तीनों आ गया तो 11,400 and this side only 400, the balance is 11,000. This 11,000 you have to do, this is profit, which ratio 3:2, that means 6600, 4400, 6,600 and 4,400. Now balance sheets. What we'll do, first we will write the opening balance, that is 7050, buy balance BD 7050, and also cash balance 2 balance BD 4,000, कैश का भी 2,000 BD 4,000, and revaluations का profit also you write, otherwise you will forget it. By revaluation 6,600 and 4,400. Now we will come to the one by one. First we will do the distributions of the goodwill. There is old goodwill, partners capital account debit to goodwill 12,000 8,000, समझ में आ गया, 3:2 ratio. Goodwill is 20,000 old, so partners capital account debit to 12,000, partners capital account debit to goodwill, partners capital account debit to goodwill. Okay, now adjustment one by one. First adjustment, R will bring 60,000 as capital, by cash 60,000, R or cash account debit to R's capital 60,000, this 60,000 and this 60,000, first adjustment. Second, goodwill is valued at rupees 30,000, that is already calculated, so R's capital account debit to P to Q, R's capital account debit to P's capital 3,000, R's capital account debit to Q's capital 6,000. तो R's capital account debit to P, R's capital account debit to Q, and Q capital account credit by R and credit by P, credit by R. P's capital account debit, P's capital account credit, P's capital account credit by R, Q's capital account credit by R. That means P is credited by 3, Q is credited by 6, and R is debited by 3, R is debited by 6. The second adjustment. Third adjustment is given, R cannot bring the so ho gaya. Fourth is also over, fifth is also over, sixth is also over, seventh is also over, and 8, that is it is calculations. So partners capital account, you see these 3 amount you understand, these 2 you also got, this is the balance, and this side only this 2 is coming, and this is the old goodwill. So if you find out the balance, you will get 67,600, 52,400, and this is 51,000. This is what is this? This is the new capital account balance. Capital account का old capital account का closing balance. Now cash account 4,000 opening था, 60,000 आया 64. Now balance sheet, these 3 here 1,71,000. Now old balance sheet you see, provident fund 18, that is 18 no change. Creditors 22, 500 less, 21,500. Lantern building it was 80, now it became 90. Debtors it was 22 minus 2, now it will come 22 minus 1,100. 22 minus 1,100, that means 20,900. Now stock is 36, you will get 36 minus 400, reduced by 400, so 35,600. And cash balance already you got 64 from here, 64. So you are getting 2,10,500, 2,10,500. And this is that journal entries, and this is the working. Students, few illustration and few exercise from chapter 5 I made practice for the revisions, and most important sums I done it like that. All this illustration and exercise you make practice for your 4th unit test exam. Okay, bye.